our first challenge. And I think there's just this, and maybe bring Ashraf into this thing because of the intermarket analysis. The thing that nobody's talking about right now, our first challenge really has to do with the Fed. Everybody thought the Fed was going to cut rates, inflation was over, blah, 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 blah. And it's all of a sudden everybody's realizing that no, inflationary pressures will still remain. The U.S. economy is booming, whether you like it or not. It's it's popping. As a matter of fact, you hear my alerts going off because equities are starting to rally again. I think anybody who's intelligent is going to find it very difficult for the Fed to lower rates into a growth environment where we're still printing superior numbers all across the S&P.
Yeah.
The other thing I was going to ask you, that within this whole disconnect between what the market thought, what the market is doing, is what's going on with Bitcoin? I mean, like, this is, talk about intermarket analysis. 55. This is a rally that everybody's ignoring. I mean, this is the thing, like it's like the inverse of the past when everybody was in Bitcoin. Now I know nobody who's trading it. The thing went from like 18 to 55. It is the biggest, it's bigger than Nvidia and nobody cares. Like, that's just fascinates me on the intermarket analysis. What do you think is happening?
Well, in a way there, Boris, you're slightly stealing my thunder for maybe challenge 3 here. So I've got to be a little bit coy on this one.
Okay.
But obviously Bitcoin, it's going absolutely bonkers, isn't it? I actually put it out into my chat room this morning about what do we think about this for this coming up challenge that we're going to do in a moment. Do we buy it or do we sell it? Of course, it's been torn up, tearing ahead at the moment. Obviously, on the ETF, you've got the halving. I don't know too much about this, but you've got halving next month or a couple of months' time as well. Yeah. And there was one big outfit that bought like $150,000 worth, I think, yesterday. What was it? US Micro Strategy. I think they bought. They went in.
Oh yeah, he's been buying. He's been buying it for his treasury. He's just a huge. He's been Bitcoin bull forever.
Well, I tell you what, Boris, and I say this to my trading community. I don't know where it's going, but I know pretty confidently when my kids are at university in 10 years' time or whatever it is, they'll be talking about Bitcoin in some way. In 10 years' time. Yeah. So why not now just squirrel some away every month? It could be one of these Berkshire Hathaways or one of these Microsofts. If you invested $500 back in 2024, now it's worth 500 million or whatever it is. So for me, I mean, it's something that you can't ignore. Even in our space now, we're using it to buy things online as well. So I think the future's that's still going to be there. Whether all these other altcoins will drop out at some point, but
yeah, can I add?
What do you think within the intermarket analysis? How does that play into your thing? I was going to ask you because you're a big Bitcoin maximalist.
Well, yeah, I mean, putting labels aside, here's the thing. Okay, so the problem with intermarket analysis when you're doing an event like this one, where you have to put in a trade and it's sort of relatively short term, is that it takes a while. It's probably not apt. So I start by looking for by the top down. I'm looking at the thing that is hurting the market. What is the thing that is hurting the market? I'm looking at the 10-year yield. The 10-year yield, as long as it does not go above 4.34, which is a moving average, which is a right shoulder, then we are fine. Okay, as long as it does not go above that, gold is not going to hurt. What does gold hurt? Meaning gold does not go down below 2017. Meaning NASDAQ does not go down 150 pips. As long as yields cannot break above that big resistance, these guys, the pain trade cannot happen. Okay, so this is but if you want to add Bitcoin to the conversation, listen, where do we take it from? Look, I was in the 8-cap webinar that I did with you guys.
Yeah,
and with
that's why I was asking you.
I was looking at a 16 level. So gold to Bitcoin, whenever gold, whenever the Bitcoin went up, and it hit the 16-ounce level, it was either a pivotal resistance or a support. That means if it failed it came back down. Case in point, July. So in the rally of, I know we're supposed to be trading and people are itching their ears and this, come on guys, stop talking. We always talk all the time. I want to do some trading. What we're about to say is probably much more. What we're about to say is probably much more important than the few trades that we're going to do. So please listen, because we've been talking with some heavy lifters here in Saudi, and they agree with a lot of it. And this is as follows. Basically, You remember in Bitcoin when it went above 15 and 18 and 19,000 and 25,000, it was an inverted head and shoulder. The target was 35. Where did it stop in July of last year? 31. And I'm like scratching my head. Why did it fall $4,000 out of the inverted head and shoulder target? And then I'm looking, the resistance was 16. It tried to, so Bitcoin divided by gold ratio, it went to 16 and it failed. Well, once it break it, that's it. You look at the ratio. Once it broke 16, which was in October, it went up. Now that we are at 27, when I'm looking at it, I'm looking at Bitcoin has broken above a resistance against the NASDAQ, i.e. Bitcoin divided by NASDAQ, you had a triple top, it was broken. Bitcoin divided by gold, we're broken.
Right.
57,000 is a key Fibonacci resistance. 57, after 57, we might go to 62.5 because based on an average percentage increase in the 30 days to each halving.
Huh. What's the all-time high for Bitcoin? Is it somewhere in the 60s?
69, 68, something like that.
Okay. I mean, it's really it'd be really, really interesting to see where it goes within that context. So,
sorry. Just one last thing. So yes, MicroStrategy. Yes, Michael Saylor. Blah 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 blah. So here's what's important. Guys. Those 11 ETFs in the first 30 days of trading. The 11. Do you know how much Bitcoin? Not in dollars. Do you know how many Bitcoins they bought? Say a number.
I don't know.
280,000.
That's a lot.
Do you know how many Bitcoins were issued?
No.
10 times less.
Yeah. Right.
So if you talk about supply-demand imbalance in uranium or supply-demand imbalance in oil, supply-demand imbalance in Bitcoin.
Well, yeah. I mean, the ETF now makes it essentially seamless for any investor across the world to buy Bitcoin, for grandpa like me to buy Bitcoin without having to actually interact with Bitcoin itself. And I think that's what you're seeing is that proxy dynamic that's really kind of driving. It's fascinating.
Or with Coinbase. Yeah.
It
democratizes the investment in Bitcoin. It reaches out to the people in Kentucky, in Alabama. They don't have to deal with the password, with the phrase, with the seed.
Buy the ETF from Charles Schwab or any of the
and the fund, the big fund, they've got to get involved. They can't be missing out on this. You know, they're competing with each other, and they see this sort of meteoric rise. The funds now can get involved, and it just makes it much more accessible. And
bringing it back to the Fed, bringing it back to the idea of inflation, bringing it back to the fact that kind of Bitcoin is sort of really screaming. I mean, if you're sort of a fundamentalist, it seems like Bitcoin is screaming higher price level. Sorry, let me rephrase this. It's not so much inflation, I think, as sovereign debt concern.
I agree.
Let me kind of bring all of this together. People are afraid that if Fed doesn't lower rates, U.S. budget deficit, which is massive, is going to be consumed by interest rate costs. We're almost on a pace where like a quarter of all taxes go to nothing more than servicing the interest on the debt. It's the most non-productive use of capital you can possibly imagine. So if interest rates remain high, more and more of the U.S. tax base will be just simply consumed by interest rate payments. That's the concern. That's why I think you have this, sovereign debt worry that's translating into a bigger bet into Bitcoin. So given all of those things, where do we think the Fed is going to do? What's the trade here going forward? What's the trade you guys going to make, given the Fed that the